Hello and welcome back to Paisa Forever channel. If you've been watching the markets lately, you know something big is shifting. We usually talk about gold or silver, but right now the headlines are screaming copper. I saw an article this morning calling it the AI metal, and the charts from 2025 look absolutely vertical. But here's the problem, and why we're making this video. I went to my broker app this morning to find a copper ETF, and I found absolutely nothing. Zero. So to help us figure out how to navigate this market from India, I've got our financial expert with us. Welcome back.
Thanks for having me. And you aren't crazy. Copper really is the main character in the global commodities story right now.
It feels like it. 2025 was wild.
Historic, actually. In 2025 alone, global copper prices surged over 60%. As of January 2026, we are seeing prices on the MCX hovering around rupees 1,292 per kilogram. That is a massive jump. The market is realizing copper isn't just for plumbing anymore. It's the backbone of AI data centers, EVs, and renewable energy grids.
I want to ask about the AI connection in a minute, but first, let's solve my problem. I searched for copper bees on the NSE, just like gold bees, and found nothing. Why doesn't it exist?
That is the first big reality check. India has no physical copper ETF.
But why? If gold ETFs work, why not copper?
It's a physics problem. Gold is value dense. You can store a crore worth in a small safe. Copper is cheap by weight. To store that same value, you'd need a massive warehouse. The cost of storage and insurance, what we call carry cost, is too high. If a fund house launched a physical copper ETF here, the fees would be huge and the tracking error would be terrible.
Okay, that makes sense. So if I can't buy the metal on the NSE, am I forced to buy stocks?
Domestically, yes, stocks are your primary proxy, but buying a copper company isn't the same as buying the metal. In India, you generally look at three major players. First, Hindustan Copper. They are the only true miner. They actually dig the ore out of the ground. Their profit is most directly linked to copper prices.
And the others?
Then you have Hindalco. They are massive, but they are custom smelters. They buy raw concentrate and refine it. Their profit comes more from processing margins than the raw metal price. And finally, there's the new heavyweight Adani Enterprises, which has set up the Kutch copper refinery. So if you stay in India, you are buying businesses, not just the commodity.
So I'm taking on management risk and execution risk just to get copper exposure. What if I want the pure stuff? Can I use those apps that let me invest in the US markets?
You can, and for pure exposure, that is often the cleaner route. Using the LRS, Liberalized Remittance Scheme, you can invest in US-listed ETFs. There are two big ones people watch.
Which ones?
First is the Global X-Copper Miners ETF, COPS. That gives you a basket of global miners, so you aren't betting on just one company. The second is the United States Copper Index Fund, SEPA. That one tracks the metal futures directly.
SEPA sounds like exactly what I wanted. But what about the costs? I've heard about TCS, tax collected at source.
That is the main hurdle. If you transfer more than 10 lakh rupees in a financial year, the government collects 20% TCS upfront.
So if I send 15 lakh rupees, they lock up 20% of the extra 5 lakh rupees?
Exactly. You can claim it back as a refund when you file your taxes, but your capital is locked up for months. It's a cash flow hit you have to plan for.
That's annoying but manageable. What about the tax on profits? Foreign stocks used to be taxed at my income slab, which is painful.
This is the good news. The tax rules changed for FY 2025-26. Foreign ETFs are now considered long-term capital assets if held for more than 24 months. The rate is just 12.5%.
That's way better than the 30% slab rate.
Much better. Just remember, unlike Indian stocks, you don't get the 1,25,000 rupee exemption. You pay 12.5% on the very first rupee of profit. But for long-term holding, it's very efficient.
Okay, so the US route wins on purity and tax, but loses on paperwork. Now I have to ask about the Wild West. I saw people on X, hyping up copper crypto. There's a token on Solana called COPPR. Is that a digital version of the metal?
No, please be very careful here. This is a huge area of confusion.
So $COPPR isn't backed by copper?
Not at all. There's a legitimate company called copper.com, but you can't invest in them. The tokens you see like dollar copper are usually meme coins. They have zero physical backing. They are gambling instruments, and that specific one has crashed hard recently.
So it's just a name.
Exactly. And even if there was a crypto link, the tax is terrible. In India, crypto gains are taxed at a flat 30% plus 1% TDS on every trade.
And no set-off for losses, right?
Correct. If you lose money, you can't deduct it. Compare that to the US ETF at 12.5%. The math just doesn't work for crypto commodities right now.
Clear winner for the ETF then. But is there any future tech that might fix this?
Keep an eye on Gift City. Regulators are looking at tokenized commodities. Imagine a digital token that is legally backed by 1 kg of copper in a vault but regulated by the IFSCA.
That would be the best of both worlds. Easy to trade, but safe.
Exactly. It's not mainstream yet, but by late 2026, that could be the game changer.
I'll keep watching for that. Now back to the why. Why is AI driving metal prices? Chips are silicon, not copper.
True, but the infrastructure is copper. AI data centers use massive amounts of power, 3 to 4 times more than a normal server farm. Moving that power requires thick copper cabling. Plus, the cooling systems often use copper.
So the plumbing of the internet is getting an upgrade.
Precisely. And add to that India's target of 500 gigawatts of renewable energy by 2030. Solar parks, wind farms, and the transmission lines to connect them are all copper intensive.
So demand is exploding. Can't we just dig more?
We call that the supply cliff. It takes 10 to 15 years to open a new mine, but demand is spiking now. Plus, existing mines in Chile and Peru are facing labor strikes and declining ore quality. We are digging up more dirt to get less metal.
A classic squeeze.
A structural deficit. That's why analysts are calling it a supercycle. It doesn't mean prices go up every day, but the long-term trend is upward until supply catches up, which could take years.
That's a powerful thesis. So if we summarize the options for an Indian investor today, what does the cheat sheet look like?
I'd break it down like this. Easiest domestic option, buy stocks like Hindustan Copper or Hindustan Copper. Just remember you are taking on company risks. Purest exposure. Open a US account via vested or IND money and buy the CPER or OPS ETF. You deal with the 20% TCS lockup, but you get the 12.5% tax rate and pure price tracking. The trap. Avoid copper crypto tokens. They are high-tax gambling, not investing. The future. Watch Gift City for regulated tokenized assets.
That is crystal clear. I think I might look into the US route. I like the idea of owning the commodity proxy rather than betting on one CEO.
It's a solid approach. Diversification is key.
Thank you so much for clearing this up. I finally understand why my search bar came up empty this morning.
Happy to help.
And for you watching, let us know in the comments. Are you bullish on the AI metal or do you think it's overhyped? Don't forget to like and subscribe, and we'll see you in the next video. Disclaimer: this video is for informational purposes only and does not constitute financial advice. The market involves risk, so please conduct your own research before investing.